Hey everyone, welcome back to Corporate Decoder, the place where we unravel the mysteries of corporate finance. Today we've got a bit of a financial puzzle from FirstEnergy Transmission, LLC, or FET as they like to be called. It seems like they're orchestrating a bit of a backstage shuffle with their debt. So, what is the big news? Well, FET announced they are offering to exchange a pretty hefty sum of their existing debt for new, identical debt. Think of it like trading in an old bill for a brand new one, at the same value. It sounds simple, but in the world of corporate finance, these moves can speak volumes about a company's health and its strategy. First, let's get who we're looking at. This is FirstEnergy Transmission, LLC, a Delaware limited liability company. They are a big player in the energy transmission space. The date that matters here is the 5th of December 2025. This is when they put out this announcement. Now for the meat of it, FET is offering to swap out a large chunk of their debt, specifically up to $450 million worth. This debt is tied to their 4.750% senior notes that are due in 2033. They are offering to swap these old notes for new ones, which are also 4.750% senior notes due in 2033. But these new ones are registered under a specific act, the Securities Act of 1933. What does this really mean? This exchange offer is essentially FET trying to tidy up their financial paperwork. By exchanging outstanding notes for registered ones, they are likely aiming for easier trading and greater transparency in the financial markets. It is a bit like updating your vehicle registration so it is easier to sell or drive legally everywhere. This doesn't necessarily mean they are in trouble, but it is a proactive move to manage their debt portfolio. It is a common practice for companies to do this, especially when market conditions are favorable or when they are looking to streamline their financing. It could also be a precursor to refinancing or issuing new types of debt. The actual details of this offer are in a news release which is attached to this filing. They are essentially saying, go read this for the full scoop. Now, as with most of these reports, there is a section dedicated to what we call forward-looking statements. This is where the company talks about what they expect to happen in the future. They're basically putting a disclaimer out there saying, hey, we hope things go great, but there are lots of risks and uncertainties, and what we say might not actually happen. This is a standard part of these filings to protect themselves from lawsuits. If their predictions don't pan out, they're telling you to look at their other filings like their 10K and 10Q reports for a more detailed rundown of these risks, which is good advice. And as referenced, here is Exhibit 99.1, the news release itself. This details the exchange offer we just discussed. It is the company's official announcement to the public and investors about this debt maneuver. And here we have the cover page interactive data file. This is essentially an electronic tag system for the document, making it easier for computers to read and process the information in the filing, especially for financial data. Now, let's talk about what this means for FET and its investors. This debt exchange is not a sign of immediate distress. A company that is in deep financial trouble usually struggles to even get its existing debt refinanced, let alone offer to exchange it for new registered notes. This move suggests FET is in a stable position and is proactively managing its capital structure. They are likely aiming to reduce their cost of borrowing over the long term or perhaps enhance the liquidity of their bonds. By having registered notes, it can make it easier for other investors to buy and sell these bonds, which can lead to a more efficient market pricing. Think about it this way. If you have a bunch of IOS that are informal and hard to transfer, it is like trying to sell a used item without a clear title. It is more complicated. But if you replace them with official, registered documents, it is like having a clear title to your car. It is much easier to sell or trade. Companies want this ease and efficiency for their debt so they can manage their money matters smoothly. Looking ahead, this move by FET is a signal of financial prudence. It shows they are thinking about long-term stability and market access. While there isn't a deep financial table here with revenue or profit numbers to dissect in this particular 8K filing, the nature of this announcement points to a company focused on operational efficiency and solid financial management. The key takeaway is that FET is actively shaping its financial future by making strategic adjustments to its debt instruments. They are essentially cleaning up their balance sheet and likely preparing for future growth or strategic initiatives without the immediate baggage of less liquid or less transparent debt. In conclusion, FET's announcement of this debt exchange is a positive indicator for its financial health and strategic planning. It is a move that demonstrates a commitment to transparency and market efficiency. While we didn't dive into deep financial statements in this specific report, the action itself speaks volumes about a company that is managing its liabilities proactively and strategically. It indicates they are in a solid enough position to undertake such a maneuver. aiming for better liquidity and a more streamlined financial profile. Alright, that is our breakdown of FirstEnergy Transmission's latest filing. What is your take on this debt exchange strategy? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more corporate deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.